Hey guys, what's up? I'm back with my lesson as I had promised about Basel norms. So, this is the 10th part or the 10th part of the series under banking that we are discussing. So far, we have discussed so many things about banking. I've discussed about banking, types of banks, various categories of banks, what are they, functions of banks, functions performed by them. So we have discussed so many things: capital adequacy ratio, NPAs, its classification. Now we are going to discuss a very, very important aspect, which is by the name of Basel norms or Basel reforms. This lesson is presented by me, Ayush Sanghi, part 10. Follow me on this Unacademy user link for more of such future awesome lessons. Now let's understand that Basel Committee on Banking Supervision. So what happened? This dates back to 1970s. To be particular, 1974 it was created, but the talks had begun much before that. So let's say early 70s. The Basel Committee on Banking Supervision is an institution created by the central bank governors of the group of 10 nations. Central bank governors means the you can say all the governors of central banks, just like Dr. Rajan of RBI. It was created in 1974 and meets regularly 4 times a year. This is historical. Even now they try to meet. So, not the governors per se, but yes, important people meet. The committee's members come from all these countries: Argentina, Australia, Belgium, etc. All these countries they come from, and they sit together in order to supervise or to recommend how to make the supervision better. So, Basel Committee on Banking Supervision, the committee usually meets at the Bank of International Settlements. Very, very important. BIS, Bank of International Settlements in Basel, Switzerland, where it is a 12-member permanent secretariat is located. So, Basel, Switzerland is the name of the place in Switzerland. It's Basel. Because here they meet at this place, Bank for International Settlements, which is why we call them Basel norms or Basel reforms. Are you able to understand? So, is that clear to everyone? Basel Committee formulates broad supervisory standards and guidelines and recommends statements of best practice in banking supervision. This is what is suggested: statements of best practice in banking supervision. So, how to supervise the banks? Its best practices are suggested by Basel Committee. Now, how is Basel Committee important? How does banking supervision become better? These they decide on the basis of the decision that is taken by proper brainstorming, discussion on it on clause by clause basis. They come up with certain norms. Those norms are considered to be Basel norms. Be careful about one thing. The committee is often referred to as the BIS committee as it meets at the Bank for International Settlement. As we just discussed, they meet at the BIS, but never confuse Basel with BIS, Bank for International Settlement. It's some other committee. It's the Basel Committee. However, a BIS and the Basel Committee remain two distinct entities, so we cannot confuse the two. Now, when they met for the first time, that kind of supervisory functions, what they had suggested, they wanted to apply them. In order to apply them, everything had to be brought to paper and a name had to be given to it. Since they were sitting in Basel, all the nations, and they were deliberating on the supervisory functions, so they gave it the name of Basel 1 recommendations. I repeat, it was Basel 1 recommendations. Basel 1 is the round of deliberations by central bankers from around the world. Yes, from around the world. In 1988, the Basel Committee in Basel, Switzerland, published a set of minimal capital requirements for banks. Very, very important for PT. So, what did Basel 1 do? All the people know what Basel is, but nobody knows what happens in Basel. So, they had this minimum capital requirements, that how much amount of adequate capital is there. This was known as 1988 Basel Accord and was enforced by law in the group of G10 countries in 92. If you have been regular with newspapers, you would understand what G10 is. Group of 10 countries. Which 10 countries, etc., that is up to you. You have to figure that out. I am not going to write it over here. Since it belongs to 1992 Accord, Basel 1 is now widely viewed as outmoded. It is historical because it is too old. And plus, whatever they had recommended then, it doesn't apply right now. Reason: the world has changed and financial conglomerates, financial innovation, and risk management have developed. Many things have come up. Competition has increased. Number of people have increased. The number of NPAs have increased. So supervisory has to become different. Like it says, financial conglomerates, financial innovation, risk management have developed. So this has led to them making a more easy set of guidelines, or a more, you can say, adaptable form of guidelines. Therefore, a more comprehensive set of guidelines known as Basel II had been in the process of implementation by several countries. and new updates in response to the financial crisis commonly known as Basel III. This was something that was after Basel I. Basel II, then a set of recommendations, Basel III. So on this basis, now we analyze that why was Basel I not good and why is Basel II or Basel III good and why isn't the country accepting it. So the analysis, Basel I, the 1988 Basel Accord primarily focused on credit risk. Yes, it focused on credit risk. Capital adequacy, which means how much risk can you bear in terms of extending credit. Assets of banks were classified and grouped in five categories according to credit risk, carrying risk weights of zero. For example, home country sovereign debt, it would carry zero, which means you are confident that you would recover this loan. So the risk weight is zero. The other thing would be 10%, 20%, 50%, up to 100%. So you should have the carrying risk weight of how much? Is it zero? इज इट 10, 20, 50? कितना परसेंट आप सर्टन हो या कितना वेट एलोकेट करते हो कि लोन हमें वापस मिल जाएगा. दिस कैटेगरी हैज एन एग्जांपल, मोस्ट कॉर्पोरेट डेट. सो इन दिस केस यू शुड बी सर्टन एंड यू हैव टू असाइन द वेटेड वैल्यू इन ऑर्डर टू रिकवर द लोन्स और रिस्क. Now, further, when we talk about banks with international presence are required to hold capital equal to 8% of risk-weighted assets. This is again Basel I. 8% of risk-weighted assets they have to hold as capital. This is something which is imposed. So these funds are blocked. Just like cash reserve ratio, or you can say liquidity, statutory liquidity ratio, those funds are blocked. Similarly, these funds would be blocked. If the funds are blocked, then banks would not appreciate it because the banks are internally also following certain reserve requirements. On top of it, if 8% another requirement comes in, that would be too much for the banks. If that is too much for the banks would not adhere or ratify to this treaty of Basel I. They would not adhere to these reforms. This is precisely what happened after Basel I was implemented. But large banks like JP Morgan Chase found Basel I's 8% requirement to be unreasonable. This was unreasonable in the sense that this was too much, and implemented credit default swap so that in reality they would have to hold capital equivalent to only 1.6% of asset. This is what they were actually doing. But 8% was something that was actually proposed by Basel I. Since 1988, this framework has been progressively introduced in member countries of G10, currently comprising 13 countries. All these countries, and in them it was introduced. All these countries are functioning well, but again, because this has become outdated, Basel II requirements came up. So in my next lesson, I'll be discussing in detail about Basel II, Basel III requirements, its proper analysis. I hope you're liking the lessons. It's just a request that hit the contribute to Ayush button. Whatever small voluntary contribution you can make towards this, it would keep us motivated in giving you more of such quality lessons. I hope you are getting the message. So this entire series of 10 parts has been provided to you. Another 2 lessons, banking would be over. After that, I would do money, and post that, I would start with monetary policy. Any kind of comments, any type of anything that you wish to ask me, please follow me on Unacademy. You can write to me on Twitter. You can message me on Facebook. You can do whatever. Twitter is the best thing. I'm available on Twitter. You can write to me on Twitter. So you'll get reply soon, very soon. Thank you so much for watching. God bless you. Bye.